Yeah, that's good. We're good to go. All right. Hey everybody, this is Tim Lowe with Signature Real Estate Group. I've got Jill Thacker here with CMG Financial.
Hi everyone.
And we're just giving you an update on what's going on in the market. And the reason why we have Jill Thacker with us is because she was on 2 different deals that I had, and she was on the other side. I was the listing agent. And she did such a good job, I decided, I gotta bring her aboard just to help out my clients. So that's how we've got Jill. So how long have you been doing loans?
Next year I will be in the business for 18 years.
Wow, okay. A little bit of experience.
Yep, I've seen a lot.
So the biggest thing for lenders that a lot of people don't understand is there is underwriters behind the scenes that really make the decisions whether the loan's gonna go forward or not. And I bet you she's got a lot of experience with dealing with that side of things.
I feel like when I retire as a loan officer, I'll be an underwriter.
There we go. Well, sounds like a plan. She's got her next, heads up. Here we go. Okay, so what we're gonna do real quick is give you an idea of what the type of loans are that are out there that most people go for. Some of them in the beginning, it's your first time home buyers are gonna go with probably an FHA.
FHA, some of them conventional, depending on their credit mainly.
Okay. Yep. And with FHA and conventional, what's the big difference between the two?
Conventional loans are very sensitive to credit score, down payment, which is where FHA comes into play. So if your credit score is not that great or you don't have access to that much money, then FHA is probably the way to go. Conventional, you can do as little as 3% down, which is nice, but you definitely want to have good credit if you're going that route. And FHA requires 3.5% down.
Okay. Now that we're on to FHA for a second, I think the biggest downside to FHA is that the mortgage insurance, you can't get rid of it. Is that correct?
Absolutely. It's there for 30 years unless you put 10% down, and then it goes away after 11 years. But most people getting an FHA loan are not going to put 10% down. Okay. So when you're factoring what your total monthly payment is going to be, you've got your principal, your interest, your taxes, and insurance. And when you don't put more than 20% down, then you also have mortgage insurance. And that's what doesn't get to go away on FHA. And on FHA, even if you put 20% down, you still have mortgage insurance. So if there's somebody with money, then conventional is probably the way to go.
Okay, that makes sense. Because you can play with that, a little bit easier too, and get rid of that mortgage insurance if you're under that.
Correct.
Now, when can they get rid of it though? That's a big question for you.
So it automatically goes away once you have 22% equity. So once the loan is paid down to 78% loan to value based on the original value or purchase price.
Okay.
If you feel like you have that equity sooner than that, you would want to reach out to your lender, again, only on a conventional loan, reach out to your lender and find out what the process is to try to get that removed, and they're going to have some sort of process in place.
Oh, I see. So even if it was, say, 2 years ago that you had your loan done, you might not have paid off much of your principal balance, but the market might have gone up as much in that time frame for you to go, hey, I might be able to get rid of this.
Yep, it's definitely worth a try.
Nice. Yeah. That sounds good. Well, let's talk about down payment assistance, because for a lot of people, they just can't afford that initial, hit up front. Right now, the median price in Las Vegas is about $300,000. So if you're putting, say, on a conventional 10% down, that's $30,000. If your scores are good enough and you're lucky enough to put the 3% down, that's still $9,000. Plus you have your closing costs, so you have to factor all this in when you're going to buy a house. Now, if you don't have the money up front, there are other choices available to you, and it's the government most of the time that has the down payment assistance program. Is that correct?
Correct. Nevada Housing Division is our primary source, our go-to for the down payment assistance, and it's nice because they used to have one product, and now they have an assortment of products. So usually when someone needs down payment assistance, I will put together a few different proposals and we'll look at the pros and cons of all of them.
Okay, so there are still possibilities for people to get into a home with little money down. Yeah. I don't know if there's any no money down.
Well, if you have a seller that's willing to contribute, then I'm still seeing once in a while where the buyer gets back their earnest money. So yeah.
So in that respect, what we were talking about on your closing costs when you go to close on the home, that's where the real estate agent will come in and help negotiate with the other side to get your buyer closing costs taken care of. That's a possibility. Now, it all depends on your circumstance and if there's multiple offers on the property, that stuff comes into play, but it's definitely a possibility, without a doubt.
Yeah.
What changes do you think we have coming up with FHA and conventional? Right now, I understand they're at a particular cap for the state of Nevada, and they are for every state. Where are we at right now with those?
So conventional just announced that in January they're going to increase the maximum loan amount. So for Clark County, that's going to be $510,400. So that's a nice increase. VA usually follows suit with conventional, but they haven't announced anything officially. And then FHA has not announced anything yet, but considering the fact that conventional did go up, I would anticipate there's going to be some sort of increase. But right now, FHA is at $322 max loan amount.
Okay. Well, great. So hopefully that gives you guys an idea of what could be possible for you. And on any of this information, just make sure to reach out to Jill. She'll be the best for you to get a better picture of where you sit. Anytime we try to help somebody get qualified for a home, there's so many factors that come into play. And it's a different environment than it used to be.
Yeah.
I mean, if you had a pulse back in the day, you could get a loan.
It's true.
And so, with a swing on any side of the pendulum, when it goes that far, it recorrects that far, and things went really strict for a long time. And they haven't all the way come out of that yet. So there's still, no matter where you go to get financed, it's always pretty tough. There's a lot of paperwork involved.
Yeah, and it's important to get all of that out of the way up front. Getting pre-qualified may sound overwhelming, but we make a really streamlined process, and we'll make sure that you're good to go so that you can start looking for a home.
That's where she's a stickler, and she's awesome, because she does not like to go forward and say, you know what, I'll give you that piece of paper, you're pre-qualified, which a lot of lenders will do, and it drives you nuts when they get halfway through escrow and they go, oh, wait a second, they're not going to qualify. And it wastes the buyer's time, it wastes the seller's time. And so it's very important to have somebody that takes that time up front to make sure that you're going to be able to get the home.
Yeah, absolutely.
So here's the next loaded question I got for her is interest rates.
That is a very loaded question that I get a lot. So let's start with conventional. The conventional rate, like I mentioned earlier, is very sensitive to credit score, down payment, loan amount, property type. There are over 30 different things that Fannie Mae and Freddie Mac consider that affect the interest rate, either for the better or the worse. So, what is the interest rate? I need more information before I can really answer that question.
Yeah.
We're seeing some rates in the 3s, some in the 4s. There's down payment assistance rates in the 5s, even the high 5s. So if you want to know the rate, you really need to sit down and start the pre-approval process. So I know where your credit is at. We know how much money you want to put down. We know what program you're going with.
Right.
Yeah.
That makes complete sense. As far as the market goes in general, I'd say the interest rates have been lower than they've been in a while. I guess it was after the market crashed that the interest rates started to climb back down.
Mm-hmm.
Now, it's always hard to tell when they're going to start creeping back up, and that's always the kicker, is you don't want to be the one guy that's sitting there going, man, I wish I would have got that loan when they were in the 4s or when they were in the 5s.
Yeah, now's a good time.
Typically, they sat, in the 7 and 8% range is like probably that middle ground. I don't know, what do you think?
6s for sure, yeah.
And we've just been so spoiled for so long.
Yes, yeah.
So don't get caught with your pants down on that one if you're on the fence.
Yeah, now's a good time. I mean, to have a 30-year loan with a 4% rate, I'll take it all day long.
Exactly. And to other realtors that are watching this video, I suggest you're all day long.
Thank you, Tim.
Anyway, if you guys need any real estate help, definitely give me a call, 702-245-8569. And for Jill Thacker,
702-218-1702.
And that's the latest and greatest for you guys, and make it a great day.